Hello and welcome to the Accendo Trader Group. This is our weekend wrap-up trading plan for July 10th, 2010. Our website is blog.accendotrader.com, where we put together effective video, technical analysis trading plans on a daily basis. Being a firm proponent of trading plans, you have to be able to answer these questions as you're developing your own trading system. What markets are you going to buy? Stocks, forex, futures, options? And then we have some money management questions. How are you going to position size in your trade? All at once? Are you going to scale in or out? What are going to be your entries? How are you going to define your risk? Where is going to be the point where you say, I need to get out of my losing position? But more importantly, how are you going to protect your profits? What type of stops are you going to use to make sure that you lock in your proceeds? And finally, what are going to be your triggers? How are you going to know to get in and out of a trade? So when we look at the week that was, we see that we ended up for the week. We're still down for the year, but we had a very strong week, primarily on light volume. We talked about that this was going to be a holiday shortened week, and that because next week is the beginning of the new earnings season, that we might see some light volume pullbacks as people begin to position themselves to hear these reports. The Dow returned back above the psychological 10,000 level. All sectors, 10 major sectors rose for the week, led by materials 8%, financials were a little over 7%. The S&P as a whole rose over 5%. So we certainly had a nice retracement back to just below the 50 moving average on the daily charts. We didn't really have any overseas news. On the economic data front, not too much going on. We did have SM services, but that wasn't really that great. But we did have the IMF increase its 2010 GDP forecast to 4.6%. That's a rise from 4.2%. And they left their 2011 forecast as unchanged. On the corporate side, we had June retail same stores come in mixed. But we also had some good news for Google. China did renew its internet license. That's been a little point of contention over the past couple of months over censorship, and Google was hacked, and so it was looking like that it was not going to happen, so that happened. Google surged, I believe, 7% for the week. So the NASDAQ certainly did lead our way. And we look at this week coming up. We don't have any economic releases on Monday, Tuesday, Wednesday, Thursday, Friday. Nothing of major sentiment. What's going to be the driver for this week is earnings. On Monday after the close, we have Alcoa, which is the traditional kickoff of the earnings season. We also have CXX. But you can see this week we've got some big ones. We got Tuesday, we've got Intel. Thursday, we got JPM. I think that's Wednesday. Google is on Thursday. Bank of America, Citi, and General Electric are on Friday. So we, pretty much each day we're going to have some type of report that can give us a catalyst to make the market move. Just want to give you guys a reminder about our 30-day challenge at Accendo Traders. We've kicked off first week covering topics like chart patterns, Heikin-Ashi, technical analysis, and then we spent the last several days talking about the psychology of trader. We even had a free ebook from the Discipline Trader called Mental Fitness for Traders. So you definitely want to sign up to get this free ebook, Mental Fitness for Traders. This upcoming week we're going to do position sizing and money management, and continue on with some more technical indicators that can help you with your trading. So check us out, Accendo Traders, 30-day challenge.accendotraders.com. All right, we're going to begin our review by looking at the S&P 500 on the daily chart, which is fine. Our YouTube folks, Dailymotion, video sites, this is our short abbreviated version. If you want the full version of our commentary, you're going to have to download our podcast. So let's take a look at it. Last week we focused in on our head and shoulders pattern right here at the 10,040 level. We did break below that. And we also focused in on the death cross, which was the 50 moving average here, breaking below the 200 moving average. That happened last week also. But we said that our moving averages and our indicators, the stochastics, MACD, and RSI, were all in oversold conditions, and with its shortened holiday week and people maybe positioning themselves for the next quarter earnings, we might see some light volume trading, and we did, and in that we saw a retracement. So our indicators have moved up. One thing that's interesting is that our RSI actually hasn't reached over bot levels since the April high here. It's basically getting to the middle level here in the 40-50 level and then turning back down, so that's something to watch. MACD getting up here towards the top. Stochastics has some more cycling up to do, so that'd be great. If you look at our downtrend line from the April highs, you can see connecting these highs here. That's fine. Puts a target of the 50 moving average if we were to continue higher. Also, this was the downtrend line we were talking about the past couple weeks. You can see once we broke above that, that was the big push higher. So we certainly have reason to be positive, but again, it was light volume. It was not the true sentiment of the traders. There wasn't volume behind this move. So next week will give us that information. Now, when we drop down to the 60-minute chart, we can see a couple of things. The first thing you can see is, again, that downtrend line that we're talking about. And you can see on Wednesday is when we broke that, and when we broke that, we took off. That's also when our moving averages broke up. And look how the 5 moving average held as support. It's the shortest term moving average I have held as support, and we ran all the way to the 200 moving average on the 60-minute chart. Now, stochastics is oversold on the 60-minute chart. So is RSI. MACD is kind of in the middle. But we want to stick with our longer time frame. So we'll take a moment and switch to the monthly chart. On our monthly chart, we can see a couple things. The 200 moving average right here is holding up as support. That's great. And maybe we can get back up to the 50 moving average. We'll see. But the 200 moving average is holding up as support. If I were to take the time to draw a fib, you guys know I'm not the biggest fib person, but I'll take a moment and just draw this out for you. You can kind of see how we retrace back up to the 62% level and heading down. So long term, monthly charts, stochastics still heading down. MACD has cycled up a little bit. RSI cycled a little bit. So we got some indecision here. And that kind of plays in play. Certainly we got a lower high. We got the head and shoulders pattern we're looking at. So the question is, longer time frame, a little bearish. And then if we take the time to cycle out of that and look at the shorter time frame to make our trading decisions, go back to the pointer. I'm going to go ahead and get rid of the if our longer time frame is bearish, mixed signals, in our shorter time frame, we should be looking for retracements to short. So if we can, again, get to this 50 moving average, I probably will be looking to short because my longer time frame is bearish and you want to trade the shorter time frame reversals. Moving on to the education portion of our video, we're using Trade Your Way to Financial Freedom by Dr. Van Tharp, and we're on to Chapter 3, Setting Objectives, and how they are one of the major parts of any system development. And so we've talked about the Holy Grail. It's really internal search, and we talked about things that might be holding you back psychologically. But here he goes on to talk about he was working with a gentleman who was, his job was to give money to people, and he was considered an expert in system development, and he was asked, what do you think all traders should do? And this guy believes that you should spend at least 50% of your time working out the objectives. Here's the thing. Remember, trading is a business. And if you don't know your business plan, your trading plan, you don't know what you're trying to accomplish, then how can you accomplish it? You know, again, if you're not disciplined and consistent, sure, you can follow some rules, but what is going to be your money management? What is going to be your objectives? What are you trying to accomplish per week, per month, per year? You got to have goals. You got to have objectives in order to be an effective trader. You guys know about our partners. We got a great futures trading room. Did great this week. Market was closed on Monday. Over 88%, over 9,000 calls using 3 to 6 contracts to earn this type of money. We got a great promotion right now. You can just join straight out. I can get you a $100 discount using tradingroom.html, or there's a 5-day trial for $10 also. We've got a futures broker for you to use. The reason you want to use our link is because you can get 20 free contract if you sign up through us. We have a great charting platform for you, and we do have a future training plan that we're going to update for you as a part of our 30-day challenge. Remember, results are not guaranteed. Futures are not for everyone. Trade at your own risk. 30-day challenge. Check us out. Full version of our podcast. Check us out on Facebook. And remember, trading's not for everyone. You can lose all your money, and we appreciate all the donations for these great free videos.